Hello, hi everyone. Today we are going to talk about candlestick and trends, including the following topics: using candlesticks, patterns to identify trends, reversals, and continuations. Then the second topic, identifying strong versus weak trends. And the third topic, how traders should trade strong versus weak trends. My name is Markus Gabel. I'm a professional analyst, speaker, trading and life coach, and of sure a real trader. And I've been trading the global markets for over 22 years right now. And if you want to have more information about myself, then you will find on my homepage, trading.com, or very soon, I guess this till the end of the week, the English version of tradingandpersonality.com. Maybe you will reserve a little bit space for that. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading on over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5. And guys, make sure that you stay online until the end of the webinar, or maybe until the end of a video if you watch it on YouTube later, when I'll be showing you why only a strong trend is it worth to risk your money. Finally, if you watch this video later on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. So guys, that's the introduction for our trading webinar this evening. It's Wednesday afternoon, it's Mark's time, and I'm so glad and so grateful that you spend your lifetime with me. And I have to send special warm greetings to my host from Admiral Markets, Katie. Thanks for opening this webinar. Thanks for spending your lifetime with me. And of course, all the other guys, they are part of this webinar this afternoon. So the chat is open, guys. If you have any questions about the webinar, the slides, or something else, type it in the chat box. If I have time for it, then I will give you an answer as soon as possible. And the big thing, it's a really big deal. If you want to follow my trades, all the trades from Paul or Jens, then come to our Trading Spotlight community on the Traders Yard and wait till the end of this webinar, then we can talk about this too. So I hope you're doing good and you had a great week until now. Let's talk a little bit. Let's talk about a little bit candlestick. What is it? First of all, candlesticks are a kind of perception. So you know everything comes from you, even a candlestick. But there is a basic subscription, how we can description, how we can describe a candlestick. So a candlestick is a type of price chart used mostly in technical analysis that display the high, the low, the open, and the closing of a security of a specific period. So, but here comes the first advice. If you talk about candles in trading, it is important to know that such candles you are looking on your chart were developed by the trading software you use. First, really important message, the trading software you use creates this candle. Such a candle doesn't exist, basically. Why? Listen, as you know, there is no specific time in the order book, which is the beginning or the end of any kind of trading. Big question, right? Why is it? But this is the easy thing. We have a look at our chart and we see the candlesticks and we are convinced that it must be right what we see there. But it's in trading the same like in real trade. We have, most of the times we have an obvious cause and we have deeper causes. And if you want to know how the world is working, or how a universe is working, and by that reason, how the chart is working, You have to look for the deeper causes. So, and now this is one of the first messages. The end and the start of any kind of trading is taking place in the order book and not in the chart. So maybe I would say the alpha and omega, the end of the start is always the order book. So let's see and let's have a look at the real order book. It costs a lot of money. So let's see, no, not here. So here we go. On the right side, you see, this is the order book here on the right side of this chart of my using software. So for example, this is the FDAX. It's a future of DAX. So you see on the right side, there is the order book. So normally I used to ask, what do you see? But I ask you in that moment, what don't you see in the order book? Think about it. Normally you have a look at the chart, indicators, candlesticks, oscillators, but now the question is, what is it what you don't see in the order book? Maybe you have any kind of question, kind of answers, but let me explain a little bit more. In the order book, you cannot see any kind of time frame. Do you see any kind of time frame on the right side? Here on the right side in my monitor, in my screen, is the order book. What do you see there? You can see only numbers, no more, no less. Only numbers, figures, nothing else. So you see, you have 3 rows or maybe 4 rows. You have left side buyers, then you have sellers. So maybe I can, let's see. So you see, you have buyers, you have on the right side sellers, and what do you have else? Price, no more, no less. And this is history. This is history. But in the real order book, you only have 3 rows: buyers, sellers, and the price. So you don't see any kind of indicators. You don't see any kind of oscillators. You don't see any kind of time frames. Every kind of order book only knows 2 times: start, beginning. For example, the FDAX future starts in 8 a.m. in the morning, German time, and we finish at 10 p.m. German time evening. That's the only times the order book knows. Even in shares or commodities or something else, unless except Forex round the clock, you know. But this is the real order book. And this is the deeper cause that you know that everything you see in the chart is only developed by your software. You will never find a candlestick in the order book. The order book only knows numbers: buyers, sellers, price. Let's go a little bit deeper. What don't you see else don't in the order book? You will never find a row with your name. Or maybe did you ever find a name in the order book? Maybe your name or my name? Of course not. And you will miss a row with the topic why. You will never see in the chart, and you will never see in the order book the reason for why do people try to buy or to sell. You see, only 3 rows: buyers, sellers, and price. No more and no less. And guys, this is the really deep cause why so many people failed in trading. They focused on the wrong things in trading. So you're on the right side of the chart, and there starts the order book and there ends the order book. Everything starts and ends in the book map, the special topic, a special word for order book. So you see, and with this in your mind, with this really deep insight behind the scenes of trading, you can understand why this special candlestick is not really important, not really. So that was the first glance at the order book. So let's go on in the slides. How does a candlestick develop? Let's talk about that. As you could see in the, or as you can see in the order book at the first glance, the order book doesn't include things like a 4-hourly chart, 3 rows, buyers, sellers, and the price. So the first visible chart as a result of price movements is the so-called tick chart. The tick chart displays every single purchase and sale is pictured as one tick. Because of this tick, the tick chart doesn't share time frames beyond the beginning and the end of the trading day. Therefore, that's the reason you should not overestimate the time frame. The time frame is not objective. It's a kind which is coming from you. So like the pen, you know, it's coming from you. So let's have a look at the tick chart. You see on the left side, every purchase and every sale with the volume you can see in the brackets here. Then you can see every purchase and sale is displayed like a tick in the chart, no more, no less. You can see on the upper side, you can see there's one tick. It's not a time frame. It starts at the beginning of the trading day and it ends at the end of the trading day, no more, no less. But as you can see here right now in the chart, especially with enough history, what do you can recognize here? Let me draw it for you. Look, it's amazing. Movement, correction, movement, correction, movement, correction, movement. Isn't it amazing? No time frame, only the legacy of what you can see, what happens in the order book. Tick chart is the first legacy, what you can see in the order book. No reason why, no names in it, only the consequences of the happening of buyers and sellers. They are reacting what they can see about the price, no more, no less. This is the tick chart. Even you have it here, maybe let's open this one. You can see in Forex market as well, every purchase and every sale is displayed here as one tick. Here in this tick chart, you will never find a time frame. Every purchase and sale is displayed like a tick. In Forex, we don't know the volume behind. In shares and all the other markets, we know the volume behind. It doesn't matter about that. It's just a tick, no time frame. Guys, this is so much important because this is the deeper insight what happens in the market if you have a look on the right side of the chart. So don't and never, please, never overestimate a special time frame. So let's go on here. And this is really important. So you can see here on the slide, never overestimate the time frames, just only developed by the software you use. So basically we can say every single candle is developed by the software you use. For example, MetaTrader 5 or 4 or whatever you use there. So, and now how it developed? The software like MetaTrader 4 and 5 packs the complete moves based on the order book into the time frame you have chosen. Because you choose your time frame, not the MetaTrader. You click on 5 minutes, 10 minutes, 50 minutes. Maybe you can choose 3.5 minutes. Doesn't matter. Completely uninteresting. You choose the software. So, you know, it comes from you. Therefore, any kind of trading exists. Different people, different traders, different time frames, different perceptions of the right side on the chart. Think it through, guys. As a consequence, you can imagine that a higher time frame is so much more valuable than a lower time frame. For example, 4-hourly chart versus 5-minute chart, because the volume, the traded volume in 4 hours is so much more than the traded volume in 5-minute charts. Therefore, higher time frames or periods are much more meaningful. So imagine in your life as well. So what happens to you 5 minutes? Do you remember what happened in the morning between 7 and 8? Exactly 7:15 to 7:08 to 7:20. Do you remember exactly? Maybe it was really interesting. But most of the times, you know what happens during the whole day. If you were in vacation or in your job, or if you're one of a girlfriend or friend or something else. So in trading, it's exactly the same. No one is interested in what's happening during 5 minutes. The purchase and sales, which happens in 5 minutes, are not so valuable and meaningful like what's happened in 4 hours or maybe a daily chart. So now you can understand why the happening in 4-hourly chart is so much more powerful and meaningful than that what you can see in 5 minutes. So this is one of the reasons why I prefer to trade in higher time frames. I love higher time frames, and now I can show you my result, and now you can see why day trading is not really interesting. Day trading costs a lot of times and emotions and lifetime, and you will never get that result you imagine and you wish and you was expecting, because it's not meaningful what happens in 1 minute. I know why people try to make day trading so often. Quick money, fast money, but believe me, doesn't work. It's not in balance what you have to invest on lifetime and power and from yourself what you get from the market. A couple of pips, but what do you have to invest for that? Too much lifetime. And believe me, if you make day trading, you will have more losses than winners. So more losing trades than winner trades. So it's really, really complicated. So in my opinion, you always have the chance to decide if you want to travel with the Titanic or with a small boat. What do you want? In my opinion, it's always the best. You take the Titanic. Volume, big, and straight ahead. So let's take a look at the real chart. So here we go. The real chart. So for example, as you can see, this is maybe, let's see. Let's open this chart. So this is maybe 4-hourly chart. So you can see it's always more valuable what's happened in 4 hours. Then you can see the trend is more stable than, for example, in 5 minutes. You can see here, come on. So really, really not really calm. You can see it's up and down, up and down. The trends are not stable, are not really valid all the time. You have sideways phases and something else. So you see it's more higher volatility than, for example, in 4-hourly charts. You can see stable trends and one candle in 4-hourly chart is so much more valuable than maybe in 1 minute, for example, or 5 minutes. There's only one reason why people want to trade 1 minute or 5 minute charts, because it's a promise of quick results and quick, how should I say, profits, but it doesn't work. So look at the right side, over 3,000 pips in profit. So look at this one, maybe let's see, one trade. Just have a look at this one. Can you see it? I'm in profit with 1,240 pips. Try to do that in day trading. Try it. You will take almost 1 year to get this result in day trading. So this is kind of weekly chart. It's amazing. And this is not the only one. So you can see 940 pips, because what's happened in 1 week is so much more valuable what happens in 1 minute. So how much I have to invest for my lifetime? For my lifetime course, you know, lifetime is absolutely priceless. For all the other things, you can have MasterCard. But your lifetime is absolutely priceless. So what do you have to invest? Just 1 hour Sunday to check the markets? It's amazing. So, or maybe this one, you see 770, 80 pips. It's really, really interesting. Or just, let's see now, this one, British. Let's see. Okay, that's the point. You'll see 504 pips, and I don't have to invest too much things. And this is what I want to show you, why I try to use 4-hourly charts or maybe weekly charts. It's really, really, it's a calm trading, but absolutely profitable. So, and now let's show you my special result on another real account. So you can see I do the same there exactly. Can you see? I'm in profit with 64%. I have opened 24 trades at the same time. I'm in profit with 64%. So now tell me, is it necessary to make day trading to get such a result? No, not. And why? It's not necessary to spend so much my lifetime. You know, lifetime is priceless. If you can have an amazing result with really calm trading, if you use candlesticks in higher time frames. And this is the point you should realize if you come to trading. So let's go on here on our slides. Okay, that's real chart. So now you understand why I prefer higher time frames. It's my mission to help you to become successful. So you know, to become successful in trading is not depending on a strategy. Strategy is 10% of the success. 90% is you. It's a human factor. And this is a deep, deep insight. As humans, we have to accept the inevitable thing, yes, that I know 4-hourly charts take so much longer than 5 minutes. I have to wait longer for my results, but think it through. What is more worth? I don't know if you have family or friends or something else. Now imagine you can go out with your girlfriend to a lovely dinner, or you can go having special times with your friends. Okay, not right now, we have coronavirus outside there, but sometimes we will have fun again. Or maybe you can have really, really quality time for yourself. Read a book or have time, really nice times with your kiddies. And now imagine you can have big results with really calm trading in hourly charts, daily chart, weekly chart. So you can make money every month, every year, and at the same time, you can enjoy your quality time. You don't need spend too much lifetime for trading. It's awesome if you have trades in hourly chart or weekly chart, for example. You don't need to spend too much lifetime in front of your screens with the useful and stupid day trading. Just only promise to make quick and fast money. But you know, we have 80% of all traders failed in trading. Look at the small readings on the homepage of every kind of trader, of every kind of broker. 80% of all traders lose money every month. Why is it? A human factor. It's the stupid promise of day trading. You can make money very easy and very quick. It's a damn it lie. No more, no less. And guys, there is a way. There's a really awesome way to make money in the charts. But it's depending from the human factor. This is why I have a trading escort service, because I can support you. And this is what we do here in our Trading Spotlight series and in our amazing Trading Spotlight community, where we support you with our trades, that you can follow them and you can have the same results like we, and we work really hard that you can become successful in trading as well. How to identify a trend reversal right now? So, you know, all traders have their own perception on where they think the price will move, so they choose to buy or sell. And this is the point. And maybe, you know, everything is a kind of perception. And let no one tell you he would know what will happen, what happens. There doesn't exist a right or false in trading. There doesn't exist like that. Because especially in trading, it's a kind of perception. Everything. Otherwise, we wouldn't have any kind of trading. Someone is trading 5 minutes, someone is in hourly chart, 1 minute, 5 hours, 50 minutes, 10 minutes. You know that. Everything on the right side of the chart is a kind of perception. This is my example from what is that? What is this? You say this is a pen. Yes. But if a puppy dog comes in and would see this thing, what would the puppy dog would do with that thing? I guess it would, like a chewing toy. So who is right? The human would say it's a pen, or the dog which will say it's a chew toy. Who is right? Maybe both of them are right. So if I put the pen there and the human goes out and the dog goes out and no one is here, what is the thing in this moment? Nothing. No one is there. It's nothing. So the human comes in and sees, oh, a pen. And the dog comes in and would say, it's not a pen. It's a chew toy for the dog. So you see, this thing can be two perceptions at the same time. For humans, a pen, and for the dog, a chew toy. So who is right? Both are right. But it's nothing. It's a kind of perception. And this is the same on the right side of the chart. We have 10 traders. 10 traders have a look at the chart, and 10 traders have different opinions and perceptions on the right side of the chart. Therefore, they decide completely different. This is the reason why there is a trade. Because the one says, oh, it's a great opportunity, I want to buy. The next guy in another country, in another time frame would say, oh my God, I have to sell this one. And now you can buy because there's another one who wants to sell. That's the point why we can make trades. But you see, and if you think it through, and guys, this is the really deeper course. This is how our universe is working. Everything comes from us. If this pen would be a pen by itself, the dog would write a letter to his doggy girlfriend. But it's a chew toy. Think about it. Everything comes from you. Therefore, it doesn't exist the right or false, especially in trading. So therefore, movements and corrections occur, and finally a trend develops in every single time frame, even on the tick chart. You remember? Just have a look here, even in the tick chart. So where is it? Here we go. You see, even in the tick chart. Look at this one. It's amazing. That's the tick chart. No time frame. So you see, again, correction, movement, correction, movement, correction, movement, correction. Amazing. Look at this one. Oh, movement, correction. And then to the upper side, movement, correction. Even in the tick chart, a trend develops and occurs. Why? Different people with different perceptions choose differently. They buy and they sell. And if you have more buyers, the reason doesn't matter, the price rise. If you have more sellers, the price decrease to the lower side. In every single time frame, and you know the time frame doesn't interest, it doesn't matter. In the order book doesn't exist any kind of time frame. If you follow the rules of the Dow strategy, then you know that you should use the accumulation phase to start your trades, which means you need to identify a reversal. So what is it? Just have a look. I will draw it for you. So here we go. You see, here is a reversal on the slide. Here is a reversal. There was a reversal. And this kind of reversals are identified as the so-called accumulation phase. And this is what Charles Dow figured out in the 19th century. He saw after every movement, the next correction will come. And this is what's happened in the chart, you know? People try to buy very cheap and want to sell very expensive. That's how trades work, every kind of trades. And on the opposite direction, you want to sell very expensive and want to buy back very cheap. This you want to do. Therefore, Charles Dow figured out in 1879, he creates his 6 tenets of Charles Dow, that the accumulation phase is that kind of phase where experienced traders are buying back the price because it's a cheaper price after they could see there was a kind of trend. So, and the candlesticks, our topic for this afternoon, will help you to identify such a kind of trend reversal. A reversal is a change in the price direction of a special asset or underlying. It can occur on the upside or, of course, on the downside. Following an uptrend, a reversal would be to the downside, of course. Following a downtrend, a reversal would be on the upside. So to identify a trend reversal, you can use certain candlestick patterns like 3 black crows or evening morning star or evening star, or maybe a morning star, whatever. So let's see what they look like and what they can tell us. Let's have a look at this. And I prepared a special trend. This is weekly chart, British pound, US dollar. And here you can see there were so-called the 3 crows, 3 black candles. They pictured the end of the last move to the upper side, and then it was the beginning of a huge downtrend. So you can see, first of all, here we had an uptrend, movement, correction, movement, correction, movement, correction, movement, correction. Then the chart tried to move again. And then we had the 3 black crows, and then the price dropped down and created a new downtrend. You see, that was the result of 3 black crows, and they were reacting of this double high. Of course, yes, that's completely right. Double top pattern, maybe in this time. Yes, that's right. So if you can see such kind of 3 candles, then it's an interesting, really interesting situation to get a reversal. A trend continuation pattern is labeled as such because there is a slight tendency for the trend to continue after the pattern completes. So there are different types of continuation patterns like triangles, flags or rectangles, but you can also use candlestick patterns like a doji or maybe a reversal bar. You see this violet arrow here. You can see this is a kind of reversal bar. And the trend continuation is confirmed after a close above or below the last high low. Let's see an example here as well. Maybe here you can see. So I pictured it here. You can see this is the trend. So this is your trend, movement, correction. You see reversal bar. And then the trend continuation is confirmed by a close above the last point 2. And then you have the trend continuation. Then the correction again. So, and you see again a reversal bar, and a trend continuation is confirmed with a close, with a clear close above that, and then a trend continuation occurs here again, and again. So if you see such reversal bars or patterns in the correction of a valid trend, this is really, really amazing that you can count and speculate on a trend continuation. So you see, it's not a rocket science. The bigger part is you and me as the human factor. So there are a number of characteristics strong trends have. Occurrence will allow us to position on time. First of all, strong trends must have trending highs and lows. And moreover, as the trend is progressing, it will clearly be forming more with trend bars than counter trend ones. And if you see 15 more bars in a row, then you can see it's a really strong trend. So I prepared this kind of trend. Look at this one. So you see, it's a kind of trend, and there was a really, really strong trend. So, and here you can see we have again, the accumulation phase exactly here at maybe this moving average of 50 moving average is this. And you can see really, really strong trend, movement, correction, movement, correction, and then only very, very less reversal or counter trend bars. More than that, you see short correction, but really, really big moves to the upper side. This is a kind of really, really strong trend. In the opposite, you have a really weak trend. You can see maybe this one. This is Euro Swiss franc. It's just only a sample or like a template you can see. So you see always a really, really weak trends. You see weak, not really a trend continuation, a couple of dojis and so on. This is such a kind of really, really weak trend. Avoid to trade this if you can see such things like that. I would say it's better you trade really strong trends. Not if you can see it's more than a sideways phase than a trend. So once you find how you can trade strong versus weak trends, and once if you find a strong trend, ideally deeply in the unfair price zone, you can open your position. Yes, I know, Kitty. Maybe I need a little bit more time. You can open your position in one of the correction zones. So you can see this is correction zone, correction zone, correction zone, correction zone. Or if you trade in the lower side on the short trade correction zone, open a trade always there. So if you have enough space between the current price and the fair price, and I would recommend take a look at the webinar on price on YouTube, and the same of Admiral Markets, please. You can hold your position for a long time, at least until the price reaches its own point of control. And once if you're on track back to the fair price, you can use every correction to open a new position like a pyramid. Let's see one example. It's amazing. So let's see. So you can see now, here we go. Oh yes, here you go. You see, Japanese yen trend, we reached already point of control. Or this one, it's my trade. You see almost 500 pips in profit. So you can see this is a short trend. And here we have this kind of accumulation phases. You can open a trend always if you are in the correction and always to reach the point of control. So you see, is it amazing? I love it. I love it. Trend and price, strong trend. Start deep in the unfair price zone and go back and let it run. Let it run. The price point of control will reach. Believe me, it will work. Sometimes it needs time. And if you reach some like kind of support and you see the price won't go in your direction, maybe you can trail your stop a little bit closer to the current price, because it's not forbidden to make a re-entry. But for that, you need a strong mental fitness. Of course, it's not a guarantee that you will catch always a strong trend, but it's always the best thing. You open your position in a first correction of a solid trend, and then you will see if it will continue or not. And if not, as I said, trail your stop close and try to make a re-entry. It's allowed to make a re-entry, as I showed you right now. Okay, let's make a quick conclusion, otherwise I will get anger from my host. Candlesticks are only a legacy of the price moves in the order book. The higher the time frame of those candles, the more useful they are. So you can use such candlestick patterns to find strong trends, but you have to differ between a strong and a weak trend, and only a strong trend is worth to risk your money. I hope you learned a little bit about that and get support after the webinar. Come to our Traders Yard community. It's priceless, of course, for you. The only requirement you have to open a real account at Admiral Markets, put some money on it, and then you can come into this wonderful community. We are more than 110 attendees right now, and I can confirm that since people are a part of Trading Spotlight, they are more successful than ever before. Try it. Try it. You will enjoy it. On Friday, my wonderful continuous partner, Jens Klatt, will talk about to trade silver, including characteristics of silver, how does the setup like in real world, and how the setup really profitable on Friday, the 5th of June, same time, same place, more. If you have any questions, contact us by mail, YouTube, or Facebook. And I have to say, thank you. Thank you for your lifetime, that you shared your lifetime with me. I did all my best to give you some valuable content that you a little bit learn what you can use for your own trading. And with this in our mind, thanks, Ernest. Back to you. God bless you as well. I wish you all the best. And as always, be careful about your thoughts, because you know they're the beginning of your actions. See you. Bye-bye.